Hello class, welcome to Be Great Economics. I'm Nate, your class leader. I'm not a teacher or instructor, I'm just a guy here trying to figure out how to learn. And hopefully you can help me along the way and we help each other. Like I said, I'm not a financial advisor, so don't take anything that I say to be a word of law for what you should do with your money. This is my risk, not yours, and it is also just a point of discussion or hypotheticals. We're going to discuss economics, finance, and investing throughout this course. It's B grade economics because we're all learning, so none of us should be getting an A here. Uh, B grade knowledge and information throughout history and multiple studies, we've seen that some of the best investors, the best CEOs, the best performers in the market and in key points of leadership tend to not be A students throughout high school. They admit to having lower grades or achieved below the standard. They're high achievers, but they're not always A students. Why is that? Well, it tends to be, as far as the studies have concluded, they're more they're more prone to taking on risk. They're more willing to take on risk. They're more creative and they're more willing to take a leap of faith. The A students have a tendency to be those high earning CEOs and leaders as well, but they're usually in some form or role that's restricted because they tend to perform in a way that makes them fit into a box. It's not to say that because you get A's, you can't be creative. It's that the type of person that is a B student either doesn't care or isn't interested in what's going on here and wants to do something else elsewhere. And so we're both going to try to be creative and we're going to make mistakes along the way. And so what I want to cover here is ultimately we are going to go over finances, we're going to go over economics, we're going to go over our personal development in that, and hopefully build a community out of this that can make us stronger. We'll have opportunities to share information about investment ideas, the growth in the project, and for now I'll be covering and tracking a Covey Investment actively managed fund to test the hypothesis of whether or not you can actually have an actively managed fund that outperforms the S&P 500. We're also going to do a group project, and this group project is going to be a big one. It is $1,000 to $1 million. The B student experiment to grow 10,000% in 10 steps. That sounds like a big undertaking, and this is going to be a group project, and it's going to be my $1,000 on the line. So how do we get to $1 million with $1,000? Well, some of the traditional ways that people think about investing $1,000 and then getting rich, they're going to take the rocket to the moon. They're going to find a single undervalued secret special investment, something that nobody knows about, that somehow is also transformative to the entire world, and yet they've not invested in it. And so you're just somehow the greatest investor of all time. You're going to place an exceptional sum of money atop the highly risky and speculative asset that for some reason nobody's interested in, and yet it's totally reasonable for you to put a lot of money onto it. And then pray that the world loses its mind, stacking on dollars and dollars and dollars so that you can profit the most from it across the way. This doesn't always work out. We do see examples throughout history, but things like Dogecoin, like we all have seen what happens with Dogecoin. It went exponential. It went absolutely parabolic and insane, and it may still have multiples in front of it. We don't know. But what we do know is that very, very few people who actually became millionaires from this. Now, there were many, but their numbers are closer to lottery winners. It's very rare, it's very unlikely, and your chances of actually finding this because it's unknown means that it's not going to happen for you, most likely. You can put the effort in, you can put the work, you can find it and maybe strike it rich, but most of the time it's going to be through a balancing act of investing in the right things at the right time and then paying attention to the markets. Because 99% of the things that you invest in that are that speculative, unheard of, unresearched, unknown thing are just going to end up like a rocket that didn't exactly make it through the stratosphere. What our project is instead going to be logarithmic factorial progression, also known as exponential growth through compounded earnings. We're going to start with our $1,000 and we're going to multiply it. How many times do we have to multiply it? Well, in order to get to $1 million, we have to multiply it by 1,000. So we have to make 1,000 times $1,000. Like I said, finding a single investment to do that, a single vehicle to get us there is extremely unlikely, and we're going to go through the entire volatility net of what happens in that span of time. We don't know how long it could take. It could be like investing in Netflix where you're going to wait a decade and a half to get there. And we don't know how long this one will take, but we do know that we can do this much more simply with 10 trades. Instead of thinking of it as I need to 1000x or 1000x my money, I'm just going to double it. And I just have to double it 10 times. And this is going to be a little class project along the side where we're going to pick stocks, we're going to do call options, puts, we're going to try to take the best approach to just getting 100% gain each time. We're going to try to hedge our risk at certain points in times in order to make money elsewhere, but ultimately the goal is how do we get to the next doubling? And so if you follow this doubling method, you see that we start at $1,000 and then go to 2,000. It's one trade. And it's a lot easier to find one trade that's going to go up 100% than it is to find one that's going to go up, 10,000%. We're going to find a trade that just doubles and gets us to 2,000. Okay, a little easier. We're going to find another trade that's going to get us to 4,000. Well, that sounds like a lot, but we're just going up 100%. And then 8,000, and then 16,000, and then 32,000, and 64,000, 128,000, 256,000. We'll get to 512,000, get real nervous, and hit that million. Now, can we guarantee we do it? I don't know. I think we'll get wiped out earlier on. That's my personal opinion, is that there's a lot more risk involved here than we're accounting for. But this is to test and understand our capabilities of managing the markets, how good we are at managing those markets, and then to see if we are capable of making these types of trades, if this is doable, and if an actively managed account with somebody who is knowledgeable or who can practice the markets can do it. 9 out of 10 traders are not profitable, and those that are profitable only outperform the S&P 500 by a small margin or underperform the S&P 500 but are still profitable. This is a difficult ledge to leap over, is that you're talking about trying to be 10% and then you're actually trying to talk about being 1%. You're trying to talk about being the absolute highest performing investor by doubling your money all the time. This is more a trading thing, and it's going to take a lot of agnosticism to the investment, not to get tied to the family pet that is the stock that you like, the Teslas, the Bitcoin, the things that you want and you like, and you see it grow, and so you just keep thinking it's going to keep going, but eventually it's going to top out and you're going to be stuck waiting. So we're going to be looking to constantly transfer momentum and hopefully make as much money as possible. We can see that the exponential bar is a very drastic uptrend. We're currently at phase 0 with our little class T-Rex. And then we are at the 1000 on the logarithmic trend reveals that we're going at a 45-degree across the chart. So we're just going to go from point A to point B. Too easy, right? Well, that is going to take a lot of research and a lot of work, and so we're going to start out investing in something in the next video and then explain why and work out the details on what we did, why we did it, and how we got there. So we're going to start out at step A. This is step 0 with the introduction to the syllabus. I hope you enjoy this journey with me as we learn more about economics, finance, and how the world functions and the macroscape in which we live. I hope to make it to the top with you, and everybody enjoys the journey. Happy earnings.